Hello, this is Tom Incorvia, and welcome to my top-down trade analysis video. The information I'm about to give you is going to be pertinent for Monday, December the 22nd. Well, let's start off by taking a look at the S&P 500. As you can see, it did bounce off the lows that were placed in mid-November, but its market, to me, is starting to give me the impression it's getting tired, and I think we're going to roll over and possibly test that 750 area. There's a lot to do yet as of yet, and we still have some minor support at the 850 and about the 825, 810 area here. But it looks like it's starting to roll over, maybe after the holidays, but I think the path of least resistance is going to be on the downside. To verify this, I'd like to change the chart to the VIX chart. Stuck up in the 40s, and which is basically unheard of for this type of length. The higher the volatility, basically, the more volatile the market is, and the more fear there is, which means they're more to the downside for those who are not familiar with the VIX. But as you can see here, I'm starting to think we're going to get another push up. And again, as the VIX goes higher, it's going to put pressure on the markets. So this is validating my thinking on the S&P going down. Now, I want to take a look, being a top-down analysis, what this is doing is taking a look at the overall market, taking a look at some of the sectors, trying to find which ones are more apt to go with the market. If the market is strong, I'm looking for strong stocks in strong sectors, and vice versa. If the market is weak, which I've been pointing out here, if the market is weak, I'm looking for weaker stocks within weaker sectors. And one that I did find is the railroads. From the bounce that happened in the market mid-November, we were up on the S&Ps about 18%. I took a look at the railroads. The railroads haven't bounced but maybe 1%. They really haven't participated at all. In fact, they're stuck in a very tight trading range. And kind of the rule of thumb is until something dramatic happens, we may have a consolidation period before it tests for new lows. So this caught my eye. I think we may, if the market is rolling over, I think we're going to easily test the lows that were put in November, but most likely we're probably going to break through that and find some support from a couple years ago. I took a look at a couple stocks that were in the railroad sector. The first one that caught my eye was United Pacific. A very similar trading range that the subsector has, the railroad subsector. And again, this looks like this wants to go lower. I think the bounce here, it's gone up on less and less volume. So again, I think we're going to at least test the lows that were put in December. The other stock that fell along the lines with this as a good shorting opportunity, CSX Corporation. And once again, we've got a downward trending stock. We've got a consolidation period here. But as you can see, really not much of a bounce here. And it's a pretty safe bet at this point to say that we're going to probe new lows for the year. So if anybody has any questions, please feel free. Drop me a note at tom@traderinsight.com. Thank you very much.